Alright, what's up guys? Welcome to another live session. Today is August 7th, 2020. We're back at again. Another new month, another new NFP. Before we start Friday's session, we have to do a ritual. We have to crack open a cold one. And let's do it. Oh yeah, that's good. Nothing beats a cold Coke on a summer afternoon, right? Alright, so this week was NFP week. Now, this Monday was a holiday for us in Canada, so technically we had a 4-day trading week, and in those 4 days we had two important fundamental events. One was ADP unemployment numbers on Wednesday, and the other was NFP today. So really short week, and obviously it's best practice to not really trade this week. Many high-end traders actually just completely step outside of this week and don't trade it. It's even a common occurrence on Wall Street and Bay Street. These type of events are high risk, but they can be rewarding if you're on the right side of things. So if you're new to these sessions, in today's session we'll be going over how the week went, what we talked about, and then more importantly prepare for next week. A lot of this stuff will be with members on Discord. So if you're not a member, it's free to join. The link to sign up is in the description below. Make sure you sign up. But let's get into the juicy stuff. Now this week we only took 2 trades, right? Euro and pound short. Now they would have been great if we held on going into today. Because of the intraday nature of the trades, we weren't able to do that. But the main thing this week was our prediction that we made yesterday. That was for the dollar, right? We had a bullish prediction for the NFP. And if you read this article, we send out an article every day, a nice recap of the live. And both technicals and fundamentals show a bullish dollar for tomorrow, right? Here was the fundamentals. So we had a bullish, and as far as technical analysis go, the dollar has a mixed bias, but short term it looked bullish. And here's what we discussed in the live yesterday, right? We had dollar index here, and I told you guys, whenever you have price consolidate at a key level, like 92.50, right? And there's news coming up, important news. Price tends to jump up to the upside. There's an impulse move as the support is being held, and if it's resistance, it will tend to respect resistance and go down, right? So in this case, that's why we were bullish on the dollar. Last week we broke a key level of 93 flat. We made a low at 92.50, right? And this week we wanted to go short for the dollar. We wanted a long euro. We wanted a long pound. But once we saw price come here and create this support, we knew that this level could hold on for NFP. And that's what happens. If you look at the numbers itself, they tell a nice tale. Pretty much green all across the board, including Canada's unemployment data. So looking at the dollar, you can see unemployment rate, instead of 10.5, it was 10.2. If you look at the numbers, instead of 1.53 jobs, it was 1.76. Now the reason why we were bullish in terms of fundamentals is for the past 4 releases, the forecast has always been conservative, right? So if you look at just the past results, you'll see the forecast and the actual is always better than the forecast for the past 4 releases, including this one, right? And the same thing goes for the job numbers, right? The forecast is very moderate compared to the actual, and that's why we were saying, you know what, these forecasts might just be a bit conservative, and we may have a better result. And the same thing happened for the dollar, so the Canadian loonie. So good numbers all across the board. It's nice to see the dollar get some buyers back. Obviously, it's been in a huge sell for a while now. I mean, we've been selling it since this point up here when the dollar was at 96.50. So we've come a long ways, and it was due for a retrace, right? And so I think much of today and going into next week, maybe Monday, it's going to spend time in below this 94 level, right? That's where I think price will eventually get to. And if we do get a breakout, hey, we could think of it as a reversal on the dollar. But if we do get a rejection, it might just be a push down, right? Another leg down. So we'll watch out for that. But if you just look at the reaction we had this morning, it was nice and clean, nice surge to the upside. We reached a high of around 93.62, and if you look at the UJs, the GUs, you will see that reflect really nicely. And if you just look at Trump's Twitter, surprising because Trump usually is gloating, but he has his press secretary do that. July job report exceeds expectations. 1.8 million jobs created, 9.9 million plus created over 3 months. Unemployment. President Donald Trump is the jobs president, so the Trump administration's going to ride with these numbers, and hey, you have to give it to him. That's one thing he knows how to work is the economy, and you can see the dollar index do that. So that was pretty much what we talked about yesterday, and the only two trades we took this week, just to be very conservative, was euro dollar short. Now, this was a signal sent yesterday, actually yesterday midnight, so technically on Wednesday night. We got a first TP and then some, and then we got stopped at a break even. We can see, price ended up going in the direction we expected to. This Monday morning, we were bullish on the euro, but during the midweek, our bias changed once we saw this rejection, right, at this 4-hour significant high. So we like to trade significant highs. I believe I institute trader as well. These significant highs do mean something, and the only time I go long, for example, is if we clear a significant high. If we don't clear it, I don't care what candles have appeared here. I don't care what pattern has been confirmed. If you don't clear a significant high or low, I'm not entering that trade. And so this is why we took the short when a lot of people are looking to long, and we almost got stopped out. Price went 10 pips away from our stop loss, and then finally pushed down. So for those that maybe saw this vision, early last night, you could have probably went short. The euro, similar to the dollar index, it's just the inverse image, right? So the euro, I think it will go to the bottom of its 4-hour range, which is 1.17, and we'll see what happens after there. If we get a break of 1.17, then we can do shorts. That's fantastic. The downside is obviously very, very, very profitable, right? We have a lot of way to go downside, but if we do pop back up, the long-term goal for euro is 1.2500. So that was one of the trades, a nice clean 25 pips, which we like to kind of get, especially during these news-filled weeks. Price movements not always the cleanest. As you can see, we had a nice sharp move down, price pulled back, consolidated, and then finally dropped during NFP. So that's one setup. The other one is for GU, and you can see GU, we were looking to go short as well, but this stopped us out by 30 pips. It was a 30 pip stop that stopped us out. But you can see the signal. Very, very similar move to EU. We entered here, and we had a very tight stop loss. So after we got stopped out, price started to go down, and it would have hit it went pretty close to our final target. So we just look. Where did this thing go? Right here. Alright, so here is the signal for GU. We went to half a position, so instead of a 60 pip, it was a 30 pip stop loss. We had a target of 1.3077, and we went as low as 1.3100. So we were 3 pips away from our final target, but we just wanted to go with a tight stop. So that's why we got stopped out, and then price went, but that's fine. That's why I went with that half a position, because I knew GU would be a bit more volatile than the euro, and sometimes it needs that kind of cushioning when you have a stop that big, at least for the intraday. So similar to EU, the downside is a lot, right? You can start targeting these lows right here for the downside if we do break this 4-hour support at 1.30, right? Nice clean psychological level. 1.30, we break that on the 4-hour time frame, we could go short. We had this break on a Sunday, and that's why I don't trade Friday to Sunday closures, because the spreads get so wide that certain candles appear different than they should be, right, in regular market conditions. So that's why any 5 p.m. or Sunday/Friday closures I just kind of avoid, and I just wait for all the other closures to kind of come in the way. Apologize for that. So next week I want to see a 4-hour or a daily close below this level to take us down lower, and this would be a nice first take profit of 1.28. Now we were bullish on GU since the start of the week, since Monday, and we wanted a target of 1.3500. So that is sort of looking a bit unprobable at the moment since we sold off. But mind you, we gave a long entry from here, right? So for those that were long, the swing traders, this was a huge amount of pips that was captured. The stop loss was wide. That's why I elected to not take it or call it as a signal. But for those that are vets, they were able to get around 240, 250 pips on this long. That is why it's important to take some profits. And you know what? GU is known to do these deep retraces, right? For example, this is a pretty deep retrace. It's not nothing to laugh at. I think it's around 150 pips. So 170 pip retrace. That's unheard of, but for GU, that's no problem. So after that retrace, it just popped up another 170, and then it popped back down 170. So I think the assumption that NFP week can be consolidated is correct. For example, this week the majors really didn't do much. They kind of ranged between 2 4-hour levels, right? Their resistance and support, and that's about it. I suppose last week we had some nice swing movements. We didn't get this one, but we got EU. For those that did get this, then that's just a cherry on top. So that's how the week went. Really, yesterday I did share a minor pair trade for pound NZD. I'm still waiting for it to turn active, but obviously NFP affects this trade greatly, right? So all the majors are controlling the minors, and this is an example right here. All we were waiting for is a simple 4-hour closure below 1.96190, and we could have go short, but we didn't get that, right? So we didn't get that, so this trade was not entered. And if you just look at the kind of onslaught of trades we've been looking at, all week. So CAD Yen was an example, right? And we just got entry during London. Looks pretty good. So here's a break. Here's a retest projection. So I mean, if today was a Monday or Tuesday or Wednesday, I'd probably guess enter this trade. But CAD Yen, this intraday range is what we're targeting, and you can see, we've come off that top range. We are looking to head lower, and this may actually take a bit of a tug of war, because the CAD had also some great news this morning. So look at the CAD; it had great unemployment data as well. So maybe CAD Yen might pull back up, and that's why we combine price action plus fundamentals. We don't just trade off technicals. Fundamentals do play a key part. The other trade we wanted to do was GJ long. So again, we said we were bullish on GU, and we're waiting for price to cross above this daily resistance at 1.39700. That never happened, so we're not going to get that long. But this long had huge upside potential. Looking at the left, you can see once we break this white line, price does make a nice rally in the past. And this white line's at 139.650. If you look to the left, you can see whenever we cross this line, we do push up, right? We do push up every single time. So we were targeting that, targeting all this liquidity and price action, but GU just didn't have any buying power, and that's mainly because the dollar kept it in check all week, right? The GU was just not able to kind of jump up. And so this is a trade we can look forward to next week. But if GU starts to sell off, guys, right? If GU starts to sell off, we could take this trade. And this is one of our best ways to enter a trade. Those are new to the trading room. You want to take a listen to this. Whenever we have, this is a daily range, right? So we have a daily resistance, daily support. And whenever price makes a rally up to daily resistance, here we didn't even have enough buying power to attempt this high, right? We barely made it all the way up. We maybe sacrificed 15 pips. So you can see already price did not have any buyers to take it up to this high. But regardless, you can see on the smaller time frame, if I zoom in, you'll see all these whips, right? All these whips. What that tells me is support on the smaller time frame. So what I like to do is actually drop down to maybe the 1 hour or 30 minutes and identify that. So when we're on the 1 hour, we're going to go here. And now we can see much more clearly where that support is. So I'm just going to label it like this. And the important part for me is to kind of get the lowest low. And this is the lowest low we made, right? The support, most people will draw the support here, right? To capture most of the wicks, which is fine. But I want to capture the lowest low because price can be sneaky. So now that we have identified the lowest low, all we do is we go on the 4 hour time frame. And now we have our entry criteria, right? You see our blog post. I'm always talking about entry criteria and how, it's very strict, but it makes sure you get high probable trades. So based on this entry criteria, let me actually pop to the daily. Based on this entry criteria, now we know what we need to do for shorts, right? So although last week we had a bias of longs, right now it does not look that way, right? We look a bit more bearish. So that's fine. If we get a 4 hour closure, right, or actually a daily, I'd say daily is fine. If we had daily closure below this level, more likely than not, right, and this is a high probable trade, more likely than not, we're going to be capturing this price action from here to here, right? We're going to replicate this move that we've done in the past here, and we've used this many, many times when the markets are trending. What's happening during these conditions is instead of getting this full move or 70% of the move, what price is doing is maybe going this much in and then popping back up. But we've been more stricter about when we take profits. But anyways, this is the ideal scenario, right? So this is what I see for GJ. If GU continues to sell off and turn bearish, And this is a play for next week, right? GJ shorts. Again, the long is still an option. We just need to clear this high, and my alert is still there. 139.850 is my alert. But as far as price action is concerned, if you look at the daily time frame, right, you count the days. 1, 2, 3, 4, 5, 6. So we spent much of this week stuck under this level with no real attempt to go up higher, right? So that's a bit concerning if you're a GJ long position. And that's why I'm saying, you know what, if we do break that low of this week, which is at 137.730, we will have a pretty nice hyperbole short. And anyways, the TPs will just be where the wicks have accumulated. So here's a nice level right here. Right, we have a long wick here, two long wicks to this line, a long wick here, and then here we made a high, we made a new low in around this line, and then we jumped up. So this will be a nice TP1, and then here will be a nice TP2. Right, long wicks to this level, and then finally TP3. So there you have the anatomy of your trade, and then your stop loss will be very easy to figure out because you have this high from this week. And here you have it. So this is the trade idea for next week, which I will be looking forward to. Given that GU remains bearish or continues to be bearish, and the dollar continues to be bullish. So here's a trade idea. 3.96 R torch is pretty decent. And even if you don't get this third TP, this is still a decent trade. 2.45 on the intraday level, right? So both of these setups is fine, but I do think Monday morning during New York we'll know whether GJ and GU will be bullish, and then we can plan accordingly. This week we already discussed the long setup, so we don't have to really go over that. That chart work is already on Discord. But the bearish, momentum that we're gaining could lead to a setup like this next week. Okay. Now, I don't want to be selfish. I'll be looking to take some pair recommendations. Actually, I'll go over maybe one or two more setups that we discussed on possibly taking, and then I'll go over some pair recommendations. So hold on, but some of our, I believe it was a Forex Standard or maybe the gold provider that we just got. They were trading the NFP, and they were bullish on the dollar too, and they made a very nice prediction. So some of our providers did call signals for the NFP, and so if you guys took that, and you felt comfortable taking that, by all means, you would have been in a deep profit this morning. So again, we're always looking for new providers to kind of enhance our service, and these gold traders, and especially the one that traded NFP, I believe it was Forex Standard, was right on, right? They saw the same thing we did. If you're risk seeking, you would probably traded that. If you're risk aversive, you will probably pass on NFP. So let's get to it. Let me make sure I'm not missing anyone on Discord before I go through these potential setups. Okay. Alright, good. So we discussed a few, right? Even though we've only entered 2 this week, we tend to kind of keep our volume down on FP, but here you see, this is the long bias that we had for GU, right? And this is where price action still looked salvageable, the long idea, but since then it turned on us, and we've been discussing that GU long for a while now. Miners, pound Aussie. So let's look at pound Aussie. We wanted a potential short. Let's see how that went. And then we also have a trade idea for UNZD. So let's see how both went. And then at the during the last 20 minutes or so, I'll be going over just basically market structure. Since Institute Trader went over yesterday, I guess I just wanted to show how I identify market structure. And there's a lot of similarities between how me and him trade, especially the identification of highs and choosing to take profits. But pound Aussie, very similar to the analysis given just a few days ago. It's still valid. I'm still thinking short. It's just a matter of when we get a closure. So you can see that that 4-hour level that we wanted to enter on, right? 4-hour bearish closure below 1.81440. You can see that level right here, right? 1.81440. We have yet to break it. We're actually using as support. So this is another trade for next week. Now, mind you, we just talked about a potential bearish pound next week, right? Bearish GU, bearish GJ. You can add GA to that list as well. So this price action hasn't changed at all. It's just creating some support. So actually, if we do break this level next week, that's a good indication of shorts. because once you create support and you respect it, but you finally break it, price does tend to follow through with that momentum. So GA, I'm still looking for bearish, sell signal, and that is once we get a 4-hour closure below 1.81440. So this analysis, which is on Discord, is going to remain the same. It's the same bias, and it's the same strategy we used for GJ, right? We're using the wick points as our TPs on TP1, TP2, and then finally TP3 at this low. And this could be a new leg down. As you can see, this week's high for GA has not passed that last significant high we made back in June. So it's just a sneaky little high, a sneaky little lower high actually, and then we should go on to make a new leg down. Granted, price action resumes and stays the same from Friday to Sunday into Monday morning. So GA, I'm still bearish. I'm just waiting for the entry. So let's see if Monday we can get it. Again, the stop loss is pretty tight considering the R2R is almost 3.0. The next up is Euro NZD. So Euro NZD, here's a long idea I gave yesterday. A bit of a with the trend trade, where I told everyone that, hey, if you get a bullish candle, right, a bullish hammer off this level, you can take the long, right? And so during the live session, this blue candle right here was bullish, but obviously you want to wait for the closure, and it turned black. In this case, for me, it's bearish. For you, it's probably red. So you wouldn't enter, but you can see, eventually price pulled back up, and then once it printed this 4-hour hammer, right, this candle right here, that would have been a nice candle to enter. Again, it printed another 4-hour hammer, a nice candle to enter, and even the one right now is a 4-hour bullish hammer. So I do see another leg up for Euro NZD. It just took almost a day and a half to kind of get us going. So, again, these 4-hour bullish candle closures, if we had it here, I'm pretty sure price would have jumped up. But since this turned bearish, it's not ideal for longs, and so price did a deeper pullback, and now it's ready to go. So next week, what we can do is to take advantage of this is actually wait for price to cross above, this just wick area, right? This black line at 1.78 to 250. So we can wait for something like this, right, and then get this entry. And our TP, stop loss will be very, very tight, halfway in between this line and this line, the previous range. And we have a 3.5 R2R. So it looks good. We had the right idea, but it's also important to get the right entry. Otherwise, you're just playing with fire. So Euro NZD, I'm bullish again. A lot of these moves are based on the NFP results today. So I'm pretty sure if we look at NZD right now, NZD dollar, it's probably melting out of the sky, and that's one reason why Euro NZD is going to continue to move up. And so we could take this trade as well. So next week we might be focusing on the minors just because they are showing some more trendier options than the majors for now. So GA looks good, right? Euro NZD looks good, and even CAD yen looks good. So those are 3 options for the minors. I do believe Euro NZD will continue going up. Again, the uptrend is why you have to trade with the trend, and the uptrend has been pretty significant since the end of July, right? We've just been on a tear. So I think that's where momentum will take us, and the target we have is 1.79300. All right, so let's take a look at let me check YouTube. So any pair recommendations, send them now before I kind of do my lesson. Euro NZD, I just did that. Oil, Nad here. I'm gonna say your last name. Hey Bruce, what's up? US oil, let's see. So US oil, while gold was on a rally, US oil is just relaxing. So here's US oil, not really doing too much at all. And actually US oil, here's another example of why I don't believe in certain kind of closures, especially the ones that occur for US oil during this time. So US oil, we're still waiting for that closure below 42.50 that will take us to the promised land. And if you look at when we sent this US oil chart, it's been a while. Right, so here's our entry criteria. This was on the 21st of July. That is a long time. 4-hour bullish closure above 42.50. Now, if I look at the 4-hour time frame, This is why not all 4-hour candles are the same, right? This is the lesson right here. So this 4-hour candle, although it's a big body, it is not the candle we like to follow. We like to enter on hammers or bullish and bearish candles with 0 wicks. And this, for example, here, you have a long wick to the top, small one at the bottom. You do not enter on this trade because you will get faked out. And I'm pretty sure a lot of beginner traders got faked out on this trade. They would have entered because, oh, it's such a big candle, and then immediately price action. I mean, this is just a meme, right? Here's a smiling face meme, and then the next one is just sad face. You're just getting destroyed. And since then, the market has pretty much ran out stop loss. So if you enter the trade based on just this candle, right, which is not the entry criteria candle we use, you would have got stopped out. And so it's important you use this candle to enter, right? A candle like this is perfect. A candle like these two is almost textbook. It's perfect. These bullish hammers or these long wicks at the bottom is exactly what you need, because again, what this candle means is on a smaller time frame, there was a retest of a key level, there was a rejection of that key level, and when you're trading with the trend, that's exactly what you need to go long. And if you notice, a lot of these bullish hammers, right, they tend to happen on the retrace. So here's a push up, here's a retrace, here's a bullish hammer, price pushes up, price retraces, bullish hammer, price extends. And so that's not always the case, right? If it was, then everyone would just trade bullish hammers all day. But once you combine price action key levels and then candlestick patterns, you're good to go. So same thing with the USD oil, right? Or US oil. We're still looking to long. We just need to get a closure. Before it was a closure above 42.50, but since price action did this fake out, it's going to be a little bit more annoying because now we need price to clear this high. Okay, so instead of this being the entry criteria, we break this thing, go up. We now have to need to break this level because what price can do, and this is it, if you're really impatient as a trader, what price can do is actually come up here, right? If it comes up here, people might get excited and go long, or you know, if it comes close to here, people might get excited and go long. What price can do is come up to this level, use it as resistance, and then sell off again, right? This is the same exact thing that's happened to euro dollar. So if you look at this, right, this significant high, if you just look at euro dollar, for example, this week, you see the exact same thing happened, right? Look, price created a significant high, it sold off, price jumped up, people that are excited, people that have buy limits or buy stops up here, but it became active, and then price sold off on them. GG, right? Good game. That's what happens when you're not patient. So this is why I'm not really into using pending orders, because price can wick you, activate your order, and then just stop you out. So I think this similar price action, what we see here, where price will rally back up and then sell off, is what we'll see for US oil. Pretty much identical price action. So, and it's a bummer because, you know, gold has been on a tear against the dollar. It's just shocking that US oil is not doing the same. But I think next week we should have, you know, a bounce from this level, 41 flat, $41 a barrel. Price should make its way back up here, and then we look for shorts. Again, if we do get a break above the significant high from this week, by all means, I'm looking to go long. But just make sure it's the key candles we look out for and not just any bullish candle, okay? Do not get faked out, because this is an immediate fake out, right? Because if you entered this, you know, at 5 p.m., you came home from work, you entered the trade at 5 p.m., you took a shower, you ate dinner, next thing you know, you're on the dinner table with your jaw on the table in your plate of pasta because you're almost getting stopped out. So, you know, the markets can move quick on you, and these fake outs, once you see this type of reaction, you should probably get out. But most beginners, they just hold on because of ego, and they just take on a far greater loss. So that's what I see for US oil. It's a bummer because if you look at gold, for example, gold has completely decimated the dollar, right? I mean, just this absolute tear it's been on. And I mean, you know, our year-end target when we made the prediction back in December was 1800. We crushed it. Next was 1900. We crushed it. Next was 2000. We crushed it. And then this week, you know, we had a target of 2100. And for those value investors that, you know, this trade was given to, you know, you went up maybe I think around 150 pips. Yeah, you went up maybe around 110 pips, and then price pulled back. Again, if you're a value investor, you should be comfortable with these type of trades, because let's be honest, gold is not reversing from here, right? It's not reversing from here. If it was going to reverse, it should have reversed at the all-time high of 1921. It didn't. It should have reversed at 2000. It didn't. It could do a deep pullback, as discussed in this chart. You know, I saw price going to 2000 before the next leg up, and so I told you guys that, hey, if you want to enter now, I mean, you could, but for me, I'd probably be comfortable waiting for price to come down to 2000, a nice solid retrace, and then continue on. So obviously gold, I mean, look at the weekly. These past few weeks have just been hysterical, right? This week and then last week and last week, the week before that, it's been absolutely dominance, complete dominance of the dollar, a very depreciating asset. And so I'm surprised oil isn't up to $50 a barrel, $60 a barrel. But oil has also a lot of fundamentals weighing on it, and so that's an issue. But gold looks pretty good. Next level is 2,100, and if you get above that, then even 2,200, 2,500. Again, if you look to the left, we have left the all-time high in the dust. Right, this is the all-time high right here. We left in the dust. It's over for you. And so that's what I see for the market so far this week in terms of the potential and probable setups. I think I'm choosing the next maybe 10-15 to go over some key things. BTC, yes, so BTC, let's do that. So last time we talked about BTC, I said 13.8 should be a nice level to target. Let's take a look. It looks absolutely beautiful. BTC is so easy to trade, so easy to trade. If your broker doesn't support BTC, maybe you should get one that trades it just on the side. It's just a small account, but here it is. I mean, it's very easy to trade this. So I spent much of this year complaining that BTC was consolidating, and it spent 13 weeks under this trend line. So do you really blame me? Right? It's just consolidating. I did say once we break out this trend line, we should see a nice attempt at 10,500, which we finally crushed with some confidence. Right? Last time we came to 10,500, we didn't even get all the way there. We went to 10,400. We didn't have enough buying power. Price pulled back. This time we're going with our chest sticking out, you know, with some pump, with some volume, and you can see price completely crushed it. And that's when I said, you know what, 13.8 is the new target. We have a first TP at 12,280, and then obviously 13.8, which was the high we made just in 2019. So that's where BTC is going. Now, if BTC clears 13.8, you know, the sky's the limit. Really, obviously, the all-time high of around 20K is next on the table. But if you look at, you know, just the price action, you compare, you know, the price action here to the price action here, you'll see two distinct things, right? So for one, the last time around, we saw this huge wick, right? Price just wicked up with this. It just wicked up, right? This time around, you can see we have actually bodied candles, right? Large bodies approaching this level and then this level. So that tells you that this time around, we have a lot more buyers, and this does make sense as we're in a pandemic. The dollar is depreciating, and more countries and banks are turning into either crypto or creating their own crypto or even using BTC for some of this transactions. So fundamentals were all there, and that's why I was kind of getting annoyed. I mean, we almost had World War III and BTC didn't do anything. So now it was like now or never, and thank God it's now that BTC is making its move. So again, 12,280 is the next level, right? And then to crush that, then 13.8 would be my next target. So it's good to see us break out this long-term trend, right? And this trend dates back to the all-time high made in 2017. So if you guys recall, we had a few shorts in the earlier parts of July last year from here. And it looks like this time around we have a lot more buyers. So that's BTC. Very simple. Keep it easy, and that looks good. So I'm going to remove some of these lower levels just because the shorts are not an option. We were looking for shorts if we break below 8,500, which we didn't, so the shorts were not taken this time around. So BTC looks good for the upside. So those that held on, I mean, patience pays, right? It really does sometimes. All right, so let's go into some direction. I want to go over a pair that we haven't looked at in a while. Let's just find a random pair. I wish there was like a random pair generator. It's a pair that I don't trade often that I want to start trading. What Euro Aussie? Euro Aussie used to have Thing about Euro Aussie and a lot of the Aussie pairs, because of this huge wick, this was during the peak of the pandemic, or at least wave one. That's gonna turn things a bit weird. How's Euro Yen? The Euro Yen looks good. The Euro Yen looks trendy. And we were actually looking to go long anyways for Euro Yen, so that might, here's the long idea. You can see we're still waiting for entry to go long, so that might not work. Let's try to find. We know where Euro is headed. Euro is consolidated right now. How about Aussie NZD? If you guys have a pair that you want me to kind of analyze from top to bottom and give you market direction, let me know. But Aussie NZD is not bad. Thinking of doing a major, it might be more. Yeah, all the majors. USD yen is so consolidated. It's just stuck above support. All right, you know what? We'll do Aussie NZD and then we'll do another pair. CHF yen. Let's do CHF yen today. Okay, I got one. CAD CHF and Aussie NZD. So when we do Aussie NZD, we're gonna remove all the drawing tools and just show you how easy it is to determine the trend, right? I'm gonna go full screen for this, kind of get the wide picture view. Here we go. So another full screen, you can see everything nice and clear. And what I like to do, and what we like to do in the Forex trading room is just go on the monthly and just identify, key support and resistance zones. Now you can see, I like the first thing to do is identify where price is right now. Price is, at 1.08 to 420, right? So it's down here. So at the moment, I'm not too concerned about what's happening up here or what's happening here. I'm more concerned about things in and around this area, right? Because that's where the long-term, even short-term numbers will be. So looking at that, we're just gonna pull it down. You can see these two wicks down here. So I'm gonna just label that, right? In case we go swing short, this will be a nice TP, right? Just this nice two wicks down here. And then once you kind of get in, once you kind of zoom into recent price action, you'll see on the weekly time frame and even on the monthly, we do have this support that runs across. And I'm just gonna get a nice little rectangle to kind of cover that. Now, TradingView has not been letting me. I mean, come on. There we go. Okay, now I can make this. All right, so this is the support we have that's kind of running on the monthly. So you have a couple rallies from this level, right? A couple rallies use as support, use as resistance. That's a nice clean level. Then if you look at recent price action, right? So if we look here, recent price action, you see these highs that we're running into, right? These handful of wicks that we're running into. And that's going to be a key level that we either look for shorts from or we either look for breaks to go long. So right here is decent enough. You can see this, right? So here we have two things drawn. We have a long-term support here, a recent resistance here, and kind of a support zone in the middle, right across the middle. Now looking at recent price action, you will see that what has happened. So if we just identify it, now I know a lot of traders kind of turn away from trend lines, but I like to draw it just for the sole sake of identifying the highs and lows of a trend, right? So you just draw a simple trend line. What can you notice about the trend line, right? You can notice that obviously we broke out of a trend, right? We were in a downtrend since 2017, right? We've been making, lower highs, lower lows, lower highs, lower lows, right? And continuing to do that, right? So each time we've been making lower highs, lower lows, lower highs, lower lows. Now recently we have broke out of this trend line. We have broken out, but we do have to clear this significant high right here. If you look at this mini little wick, right? We need to clear this last significant high we made. And if we do clear that, then in all honesty, we should be going up to these levels. So just based off this, you can see that if we were to go long right now, where would be a nice place to target? You can see, these wicks up here, these wicks up here, and then you can see this last significant high. I'd probably put my target right there. Not get too greedy, but this would be a nice level to target. Okay, so you can see a lot of price action is in around this level, just a bit above, just a bit below. But this level usually has a lot of drama, a lot of volatility in that level. So there we have it. Now we have a target for our bias. We have a bias for obviously going along, coming off support, right, which is one indication of going along. We're breaking a long-term trend line. That's another indication of going along. We're coming to clear some recent highs. We already cleared these past two highs from September, and now we're looking to clear the high we made just this year. So if we go to the weekly, here's a weekly. It's clear as day what we're trying to do. Here's the highs we've made back in September 2019, right? We had sell-offs from this level. Now this year we made a nice honest attempt back in May 2020, right up here. We whipped all the way up here. Price snapped back down below the trend line. But once you come off this blue rectangle, right, we just drew this on the monthly time frame. This blue support, right? You can see we've had many rallies from this level. Whenever price goes into this blue zone from below, right, from below, we do have a rally up. We have a rally here, we have a rally here, we have a rally here, rally here. Now they vary in size, but you can see this time around we have a full-fledged rally, right? We have a lot of buyers here. So we've officially closed above that trend line we just talked about. And now this is the resistance we need to clear. Now in May, we made an honest effort to break that resistance. The price immediately got rejected. So what we're going to do is now identify our entry point, and that is after we break above that recent May high. There you have it. So you have your key level, you have your entry criteria. So if we get a daily closure, depending on how big of a swing trade this is, if you get a daily closure above this level, we can go long. Now obviously this is our long-term target. If you look to the left, you can identify some short-term targets, and you can see a lot of these wicks have accumulated here, right? If you look to the left, and here's your kind of long-term, here's your short-term target right here, right? This wick, a lot of these wicks, and then a lot of these recent wicks in this level, and that's kind of our intermediate target between here and here. So there you have it. Now if you go to the daily, you can maybe see what kind of closure you need. So on the daily, here's a daily high we made, right, back in June. I can't believe I'm saying May, but June, right? In June we made this high, and all we need is a daily bullish candle closure above this level to take us high, right? Take us all the way up. And here's the kind of construction of your trade idea. And for stop loss, I like to identify the recent low we made, and that'll just be the bottom of this daily wick. So here's our stop loss, and I'll make this red just to explain it. Okay, here's our stop loss, here's our entry, here's TP1, TP2, and then here's the overall trade idea. Okay, very simple, very nice trading with the trend strategy. You're not being too ballsy, and your stop loss could be down here. I mean, it's a 3.0 R2R. Obviously, swing trades sometimes have deep retraces, but I mean, depending on how aggressive the momentum here is, and potentially just bring it up here. But this is a good trade setup, guys. So this is how you determine the trend, right? And you're trading with the trend at all times, and not really looking for these reversals, which are kind of usually short felt, right? I think 70% of the time the market is trending, and that's what you want to do. So for example, for those that trade Aussie NZD, here is a trade idea moving forward, right? And that closure we need is above 1.088800, which is a nice clean psychological level, and we didn't even plan on doing it, but a nice clean 1.088800 level we need to break above on the daily, and you have a nice long. I'm gonna do one more for CHF yen. Before I do that, I'm make sure there's no pair recommendations, and if there isn't, I'll do CHF yen and then finish up the session. I know it's Friday, people are probably tired of the week and everything else, so I'm gonna make sure there's no other pairs. Aussie CHF, perfect. So I'll do Aussie CHF. Thank you, Marco. Marco is always on his A game. Always on his A game. Do you think it's a little bit of a pullback for BTC? I mean, honestly, from the higher time frame, it does not look like. We just had a pullback for BTC. If you look, I think now is the next leg up. So you can see we just had a pullback just recently, and I think it's the next leg up. Now, mind you, BTC can be annoying at times, and so this could be a double top, and price could kind of sell off for a bit, but I don't think BTC will be coming back down below 10,500 anytime soon. So as long as we stay above 10,500, my bullish bias still remains, but it can be annoying at times. And the dollar did have some good news today, and at the end of the day, this is BTC versus the US dollar. When the US dollar has beneficial news, it does affect everything, not just Forex. So it might be a slight pullback, but I really doubt that we close below 10,500. If we do, then I might start to worry about BTC and what highs it could achieve in the future. But for now, it still looks pretty good. Again, it's more of like a value investing trade. If you're looking to trade it. I'd probably look for maybe shorts, to be honest. An intraday short wouldn't be too bad, but in terms of those holding BTC in a wallet, you should be grinning from cheek to cheek because it looks good to go long. Alright, so Aussie CHF, and I think that will be done. So let me do a nice top-down analysis for Aussie CHF for Marco. And we will end off the session on a nice note. So let's go. So same thing as always. Me go to the monthly, do a full screen, and then man, it's hot. It is hot. East Coast or Canadian summers can be hot. People always talk about it's cold. Man, our summers are brutal. But anyways, so Aussie CHF, you're gonna identify where price is on the monthly. Now this thing has sold off, I think, for most of its existence, right? Since I think 2007. Since 2007, it's been selling off, right? I mean, straight creating lower highs, lower lows, lower highs, lower lows. It's been selling off, so it is a depreciating pair. And if you look at the recent price action, it says it's a long-term downtrend right here. So I'm gonna identify that. I don't think it hurts, but it's a nice visual. So obviously a clear downtrend. And then this is the low we made during the peak of the pandemic. I mean, well, at least in the first stage, who knows? There might be the worst might be yet to come. Knock on wood. But here's the low we made, right, during March, where things pretty much went to the fan, right? Things just hit the fan. Now, if you look at that, you'll see since then we pulled back quite sharply, right? Quite sharply. And if you look where price is currently stalling at, right? If you look at this faint line, you'll see. If you look to the left, you see you have a wick here. You look to the very left again, you have this long wick, right? Price was here for some reason, it wicked here for some reason, right? And so we're going to identify that spot. That's obviously a key spot for this pair, and we want to know why, right? We want to know why. So if you look at it, this wick area has now become kind of a resistance, right? Price is rejecting to go higher. Last month we had an inverted hammer printed, and this month it's looking at the same. So based on that, we could have a continuation short, right? We are in a downtrend, a huge downtrend. So the more likely option is continuation short, right? And next leg down, right? Push down, retrace, next leg down. So based off this, I'm bearish, right? Just because of the trend. Obviously, the small time frame might change that opinion, but for now, I'm bearish. Let's see the weekly. So the weekly clarifies it a bit more. So let me just start those back. So in the weekly, we drew this line here. Now I'm going to adjust it, right, to the recent price action. In the recent price action, if you look at the recent price action, it's actually been a bit below the black line. If you look even here, so I'm going to adjust that and put it right around here. Okay, so that's where recent price action has been using as support, right? And if you look again at this kind of consolidation on the weekly, right? Around 1, 2, 3, 4, 5, 6, 7, 8. 8 weeks of consolidation, right? It hasn't really been doing much. Back in, starting March, it started trending back up, right? It started trending back up. Since then, the momentum has died down considerably. We have spent 8 weeks of this consolidating, right? No real setups in here for Aussie NZD. Aussie CHF. So what this tells me is that either momentum is dying and it's time to sell. Otherwise, you're going to have impulse to move up. Now, the problem is about the long scenarios because this will be highly made back in June, right? If you look to the left and we want to identify some targets for when we go long, I'd say right here would be a nice target. Why would that be a nice target? Because you can see all these wicks. This resistance, price sold off, resistance, price sold off, resistance, price sold off. So that's obviously a key level that we have to cross before we even target any of these previous highs. And also it's the last significant high, right? This is the last significant high we made before price completely melted. And therefore price would like to go back up. Now the issue is back when we started this uptrend in March, right? And in June we reached this high. We didn't get all the way up here. We went as high as here. So now if you look at the R2R, things will start to make sense that this is probably not the best trade to take the long, right? So again, I like to go long, but once we clear the significant high we just made, and this is a significant high, and so if we wait for price to break this high, right? So we wait for price to get up here and then break that high. You can obviously see the R2R isn't fantastic. I mean, this is a lot of pips to grab, but in terms of R2R, price could easily, retrace at any point. Like that, could retrace here, could retrace here, retrace here, retrace here. It's not really too ideal, and that's why I'm thinking the short is the best bet. So I think, Marco, you're already short CAD CHF, and that was a simple bearish flag pattern that we found on the monthly. This is a simple short as well, right? We know the CHF tends to excel during times of uncertainty, and COVID is still around, guys, no matter how much we want it not to be, but I still think short. So now for entry, I'm going to just look at two things where price went recently. You can see price tried to go lower here, but pulled back up. And if you look to the left, you can see the last time we had a break below this level, it was right at this level where price kind of gap down and gap back up, right? This is a gap in the market, gap down, gap back up. And for me, I think that is the entry criteria we have. So here is the entry criteria for Aussie CHF, okay? So we need price to break below 0.64350. Once it does that, I would be absolutely shocked if price doesn't melt, right? Absolutely, it should melt, right? That's pretty clear what should happen. So we need, Canada to come in, maybe on the daily. I think the daily is fine because we're looking at the weekly right now, but a daily closure below this level should be enough to take us down lower. And then here's the overall trade idea, right? Let me know what you think, Marco, if you're bearish or bullish, but I'm personally bearish in this situation. And then again, TPs are just going to be where the wicks have accumulated. Because these are all-time lows, for example, from here to here is all all-time lows. We're just going to use, either gaps, so the market gapped here for one, and then just previous lows in here, right? So here's TP1, TP2, TP3, and that's the trade idea, right? Stop loss is above the recent high. It's all methodical, and here you have it. So let's see how the daily looks. Right, the daily is very consolidated. I don't know who's trading this pair other than scalpers, but there's not much that's kind of enticing me here. So I would wait for that bearish daily closure, and that once, for example, last time around when we got that bearish daily closure below this level, right, a nice inverted hammer, right, this nice inverted hammer, price completely melted to this first target point. So that's what we need to happen this time around, guys. A very simple trade idea. And it could be on the table next week, but I doubt it because the volatility is so dead here that even for price to come down all the way here is a huge ask. Right? It's a huge ask for price to melt its way down here. So it might be another week or two before we get this set up, but I do think selling is the way to go for Aussie CHF. Alright, so I think I answered everyone's questions. Let me just quickly check. For those that are watching on YouTube, and you want to get in on these live sessions, just a quick note, we only do these live sessions on Friday, right? Every other day is for our paid members, and to become a paid member is very easy, and I'm going to give you a 50% off coupon code, so you can try out the first month with very, very low risk as possible. So all you do is go to forexlens.com, you go to Forex Trading Room, you're going to click Get Started. You're going to fill out this form, or you're going to choose a package. The apprentice is the one that it applies to. Click Next, and then you should see a button that says Enter a coupon code. And if you enter first 50, your first month will be 50% off. It'll only be $73.50. And we have a 7-day risk-free trial. So if you don't enjoy the service for any reason, and you cancel within 7 days, you will get a full refund. Now, if you're wondering what we offer in our packages, you can go to pricing. And so what the apprentice will offer. You get a 7-day risk-free trial, full trading room access, which is the daily live session I host, right? The daily New York Open. You also get the daily London held by our Institute Trader, and also signal breakdowns by everyone, so including me and IT, as well as 10 signal providers. So that is a lot of content, and you can get this for $73.50 for your first month. Make sure you take advantage. And if you want anything else extra, like specific gold and oil channels and one-on-one sessions, you can look at these packages as well. But I think this is a nice starter package to see if we are really for you, and believe me, you will enjoy the service. So hope you guys have a great weekend. Next week is no NFP week. It's a full 5-day week, so we should have a nice time trading then. Please be safe, and I'll see you guys on Monday. Take care.